Hello and welcome back to our Friday interest rate update. This week, we pretty much treaded water with interest rates staying below 7% again for a 30-year fixed conventional mortgage, according to Mortgage News Daily, a great online resource, and we'll take it. Anything under 7, that's okay. The big report this week was released today, which was the Personal Consumption Expenditure, PCE, and this is the Fed's favorite measure of inflation. It came in pretty much as expected. And the Fed is very much focused on getting that core PCE, which strips out food and energy, down to their target inflation rate of 2%. Core PCE is now under 3% and still headed in the right direction. And the great news is that the 6-month run rate, if we look at the last 6 months, it's below their target at 1.85%. And if you look at the last 8-month run rate, it is almost right at their target of 2%. So if inflation appears to be under control, why aren't mortgage rates dropping faster? Well, part of the puzzle lies in the government having an excess of funds to sell on Wall Street for all of its initiatives. And with insufficient buyers to absorb all that supply, interest rates are going to remain a little bit elevated. Once this supply diminishes, and it will, we can expect quicker decline in interest rates. It might be time for the government to ease up on spending a little bit, and that'll bring down interest rates. Speaking of spending, the initial fourth quarter 2023 GDP, gross domestic product, was a robust 3.3%. 2/3 of GDP is made up of consumer spending. They're opening up their pocketbooks, and consumers kept spending over the December holiday. Credit card debt definitely went up, and the savings rate went down, but consumers are still opening their wallet and spending money. We'll see if that can continue. The government wanted a soft landing without a recession, so we'll have to wait and see if they can achieve this. Some people are still predicting a recession. We'll have to wait and see what happens. So next week is a big week with the Fed meeting and jobs reports. The Fed meets on January 30th and 31st. These can always be market movers. We don't anticipate any changes to the Fed funds rate next week. We think they're going to go status quo and leave it the way it is and wait until March, potentially, to change. Now, as I've talked about in the past, when speaking to your clients who may be considering purchasing a home around $500,000, let them know the FHA rates are actually closer to 6% than 7% like conventional loans. All the media talk is always about the standard 30-year fixed conventional rates, but FHA has made a big comeback with buyers with lower rates, and they lowered the monthly mortgage insurance last May to make it more affordable for home buyers. So I hope you have a fun weekend, and we'll see you next week. Take care. Bye-bye.